Okay, thanks, guys. Let's get this going. Appreciate you all joining us. And it's been a huge 24 hours in the space of Bitcoin, particularly the Bitcoin ETF decision handed down by a capricious SEC. Some choice words there from the Grayscale CEO. I've got a quick announcement before we get started. I'm lucky enough to have a sponsor now, and this Spaces is brought to you by Relay app, the easiest way to buy Bitcoin in Europe. No verification or registration needed. Just buy Bitcoin directly into your own wallet. Okay, so let's get started. Today I've got a gentleman from Bloomberg, Eric and James. They are two ETF specialists who've been kind enough to join us, and we've also got two guests from Grayscale who will be joining us, and when they do, I'll bring them up on stage. But first of all, I'll get this started. Eric, James, it's not an unexpected decision, but there seemed to be quite a bit of hope there coming out of Grayscale. How do you read the decision coming out from the SEC and their reasoning?
Yeah, so like you said, it wasn't unexpected at all. I feel like Grayscale has to be positive when they're talking about this. They really are trying to get this thing approved to conversion. But I've been very vocal on Twitter, on podcasts, and anybody I've spoken to that they're not going to get approved. We didn't think they were going to get approved. The SEC has been signaling for months that they weren't going to approve. Whether you look at speeches, interviews with Gensler, other decisions for other spot Bitcoin ETFs, even the decision for the Teucrium futures ETF under the 19B4 process. So that had nothing to do with spot Bitcoin. That was a futures ETF that went through the same process that spot Bitcoin ETFs go through. And the SEC spent paragraphs and paragraphs basically saying why they were approving a futures ETF. And at the same time, they were going through and saying why they weren't going to approve a spot Bitcoin ETF. So essentially, they were like preempting like any kind of arguments they were expecting from the lawsuit that Grayscale has now filed. So our whole process, basically, I'll just take one step back there to talk about the Teucrium filing. There was a lot of stuff in there, but the one thing that always stood out to me was the one thing that the SEC always wants and has said for every Bitcoin ETF denial they've had, that they want a surveillance agreement or regulated market of significant size. And that's been requested in all the denials of Bitcoin ETFs for the last 5 years. There was a lot of other things that they wanted, but that has always been there, and that's the primary thing that they've basically settled on in the last year or so. And that's what they're focusing on here. But so for the Teucrium approval for the futures ETFs, which holds CME futures, they basically said that the CME futures were a market of significant size with regards to their own futures market. So the CME futures fit their standard of a market of significant size because the market they're judging it against is the CME futures market. So that argument in the filing for Teucrium was very the SEC is blatantly saying that this is why they're approving. They're going against they're setting the stage before they even send the denial for spot Bitcoin ETF that we knew was coming, to say this is why they were preempting their argument. So that was the blatant answer for me that I knew that this denial was coming, unfortunately, or fortunately, depending on who you talk to. The one thing I will say is that a lot of people have said that the lawsuit that Grayscale has filed is frivolous. We've talked to our litigation analyst who covers financial litigation. He's dealt with a lot of these SEC inquiries and things, and he says this is by no means frivolous. He says that Grayscale is definitely the underdog based on what he's seeing. But it's not a frivolous lawsuit. They still have a chance. So that's basically the guiding outlook that's coming from Bloomberg Intelligence right now. I could keep talking, but I'll stop there and let the answer questions and talk about other things if there's anything else you want to discuss.
Thanks, James. Eric, do you have anything to add to that to open up?
Yeah, no, James is deeper in this than I am, so I defer to him on a lot of, and obviously echo what he said. I will go back to something he said and expound upon it, which is Gensler's words. Again, I'll take a victory lap. Our team was the most bullish they would approve futures. We gave it a 75% chance. It turned out true. This time, we gave this approval a 0.5% chance, which is the same odds the Jets have of winning the Super Bowl, which if you're not in the U.S., it's basically they're like the worst team. Anyway. And our key thing is his words. And I want to say he was on CNBC a couple days ago, and I want to read the words that he said. And to me, this is the heart of the matter. Here's what he says. There's a lot of risk in crypto, but there's also risk in classic securities markets. So he acknowledges that other markets have issues. Difference is there's no rules or disclosures in the former to protect from fraud and manipulation. Throw in surveillance, and that's the bottom line. He wants to regulate crypto and have it under the Gens's dome, and under his oversight. He probably also wants to check a box in his resume at the SEC because he has higher political ambitions. And I just don't see anything really happening until they have some kind of regulation proposal put out, or expanding the definition of exchange or something that would allow him to check that box and put the exchanges more under Gens's dominion. And it's just hard to get around that fact, which is in his words, and his words were what led us to be the most optimistic on the future. So again, you can say what you want about Gensler, but he definitely says what he means.
So it sounds like in approving the futures ETF, they took a broader look at the futures, the size of the futures market. But when looking at a spot Bitcoin ETF, they're purely looking at the market for a spot Bitcoin ETF rather than the broader ETF market. Does that seem like a double standard to you?
So from my point of view, the answer is yes. But so like the way I look at it, the part that I find that this is so the technical legal terms are arbitrary and capricious. I don't think there would be a lawsuit here on the table if the SEC didn't go ahead and approve futures ETFs. So I think that is what sets the stage for Grayscale even being able to file this lawsuit and having any chance of getting it through. Because when I look at the futures market and you talk to anyone, like the futures market and the spot market are very intertwined. Like if you're manipulating one market, like this, the spot market is what determines how the future market moves. And the futures market is based off of something called the Bitcoin reference rate, or the BRR. And that thing uses spot Bitcoin markets to dictate what the value of those futures markets are. So it uses things like Bitstamp and Coinbase, Kraken, Gemini, LMAX Digital. So these are all spot Bitcoin ETFs that they are saying are subject to manipulation. So basically, they're kind of asking the issuers and the exchanges filing to launch these Bitcoin ETFs to almost prove a negative, to prove that there's no manipulation, which is very hard to do. And really, it just, again, I'm going to say this repeatedly on this, it comes back to the fact that they want surveillance and regulation on a market of significant size. And that's what they're going to focus on. But again, I do really think there's some double standards going on here. But the one thing they'll lean on, they can continually lean on, is that the CME has oversight and regulation from the CFTC, which is their sister or brother agency. So I personally believe that these Bitcoin ETFs, or these spot Bitcoin markets, are likely to come under the purview of the CFTC at some point, possibly even before this lawsuit is finished. I know FTX specifically wants to come under the purview, their spot markets under the purview of the CFTC. Gensler, in another interview, said they were working with 6 different exchanges or 6 different players in the market to bring them in compliance with the SEC. So there's a lot of things happening. I would argue that a lot of these crypto tokens are securities, but the process of actually naming them securities gets sketchy. And if you do name some of these tokens as securities, all of a sudden they fit the rules of an exchange definition, and then they fall under the SEC. So not to mention the Loomis-Gillibrand bill, which could also push more things towards the CFTC, which again would provide regulation. So it's a really distinct possibility that honestly, some of the SEC's concerns are satisfied even before this lawsuit or this appeal is finished. But I'm going to guess that Grayscale, Craig and Dave can comment on this. They don't want to wait and hope that that's what happens. They'd rather take this to the courts and take their chances.
So it seems like there's a multi-layers to this consideration. You've got Bitcoin exchanges, you've got futures as an investment instrument as well, and they all seem to have different potential regulators and frameworks for regulation as well. So it's all up in the air at the moment. Why aren't they doing something more to bed down a framework?
Yeah, so this is Craig Salm, Chief Legal Officer
Hi,
at Grayscale speaking. Hey, how's it going? Thanks for having us.
Yeah, welcome.
Yeah, so on the spot exchange regulation, nobody is saying that those wouldn't be additive to investor protections across the crypto markets. But at least in the context of Bitcoin ETF approvals, it's not a requirement. Dave Laval's on the call right now. He's our global head of ETFs and has numerous examples of other spot-based ETPs that have been approved for which the underlying markets did not have any specific federal regulatory oversight. That's also even the case for the ETF markets with credit-based ETFs, where there was not previously regulation or much liquidity or surveillance, but those things came as a result of ETF approvals. So the exchange regulation is not a requirement, but taking this all the way back to 2017, when you had the first wave of both futures and spot-based ETFs being denied or withdrawn or told to withdraw, the SEC was rightfully treating those types of ETFs fairly, given that both were priced based on the underlying Bitcoin markets. And so you mentioned a concept of a double standard today. I think that's exactly the case. Grayscale refiled its application last October, which was the same date the SEC allowed trading for the first Bitcoin futures-based ETF. The reason we did that was because if the SEC is now allowing this type of product, it therefore must also be okay with a spot-based product,
We've just
like
got
what
some
GBTC
feedback.
would be. And then getting into the subsequent first denial of another spot-based Bitcoin ETF, well, that's what allowed us to create this new argument that Davis Polk laid out in their letter last year, that the SEC is now in a situation where they're treating two like investment vehicles in the context of Bitcoin ETF approvals, futures and spot, differently.
So your CEO, Michael, came out in the media this morning. The SEC is acting capriciously and arbitrarily. They're quite strong and fighting words. What do you hope to achieve from here on in?
So those words might sound like it's insulting. It's not. It's just the technical terminology in the Administrative Procedure Act that we need to be using in order to have made this petition for review. So last night we filed this petition for review after we received our unfortunate final disapproval order. And what we're saying is that by approving futures-based Bitcoin ETFs, but denying spot-based Bitcoin ETFs, like what GBTC would be, the SEC is acting arbitrarily and capriciously in violation of the Administrative Procedure Act.
So we mentioned some double standards earlier on. How do you see that?
Yeah, I think the disparate treatment of futures versus spot-based Bitcoin ETFs is applying a double standard, given the fact that both types of products are priced based on the underlying Bitcoin markets. Mm-hmm. And so if you look at, I basically spent the last 12 hours going through the very long, almost 90-page disapproval order that we received last night. And there's statements in there where the commission is saying that the surveillance that CFTC has over the CME Bitcoin futures is sufficient enough to detect potential fraud or manipulation, even if it doesn't take place on the CME Bitcoin futures. So that's saying that the surveillance can account for potential fraud or manipulation in spot Bitcoin exchanges. But at the same time, in the same disapproval order, they're saying that that's not sufficient enough to protect us in the context of spot Bitcoin ETFs. So it's just a clear inconsistency in why we think that the appellate courts, where we filed our petition for review, will come out in our favor.
Okay. Yeah, and I would layer in as well to what Craig said. In terms of a double standard that doesn't exist as it pertains to this particular disapproval order, but as we look at other products that are in the marketplace, I know Craig mentioned it a little bit briefly, but if we just were to take a look at, fixed income markets, senior loans, these are instances where there certainly is far less, surveillance and far less transparency into those markets, how they trade, how they clear, how they settle. And quite frankly, in the case of, if you want to say, high yield bonds or other segments of the fixed income market, the ETF coming to market and being on a national securities exchange that has a tremendous amount of transparency has had the net benefit and the net effect of shining a brighter light on the inefficiencies of those underlying markets. And, I always point to, just a couple of years ago when the U.S. government decided to prop up the fixed income market in the face of, some of the challenges associated with, COVID. And, look, they went into the ETF market to prop up the fixed income marketplace. Why? Because it was more efficient. It was more transparent, and the execution to get in and to get out was more efficient. And so, I think and I believe that bringing an ETF to market certainly is going to, bring additional transparency and certainly a layer of surveillance and a layer of, regulation in the form of being listed on a national securities exchange that will only shine a brighter light on any inefficiencies of the underlying market or lack of transparency, of which we believe there's very little when it's, concerning Bitcoin.
Can I jump in?
Yeah,
Can I
go
ask
on.
Grayscale a question?
Go ahead, Eric. Go ahead, mate.
So we all agree with everything you just said. We've been running this for like years at this point. But again, Gensler, I think, back to what Craig said, you're basically saying the futures and not approving futures and not spot shows inconsistency or double standard. But Gensler's been asked this multiple times, and his answer is going to be the same. And I want to know how you're going to overcome this, which is that the futures are overseen by a regulatory agency and the spot isn't. He called it the Wild West. So that's what he'll say back. What would you reply back to that?
Yeah. Hey, Eric. I mean, to that, I would say it's a great thing that we have an American democratic system where we have multiple branches. Congress wrote the regulations that the SEC is interpreting. We think they're being interpreted in the incorrect manner in the context of spot Bitcoin ETFs. We've gotten our final decision order last night, and now we can go to the courts to see if they agree with our interpretation.
Dave is the global head of ETFs for Grayscale. Welcome. A few months ago, I had you on Spaces with Valkyrie, Van Eck, and Bloomberg as well. And the consensus back then was 3 out of 4 of them thought that your ETF wouldn't be approved, and no spot Bitcoin ETF would be approved before the end of the year. But you obviously were still optimistic at that time. Can you share with us again why you had that optimism, what's transpired since then, and how you take this decision in light of what has happened since then?
Yeah, I would echo a lot of what Craig has already said. My optimism at that point in time was, based largely upon the fact that we had a filing in the marketplace and we felt we had very strong arguments about why we should be approved in light of what transpired in October of last year. That optimism still remains. It just remains in a different kind of segment of the process. And so upon the denial and, our remained conviction about the arguments that we have and the position that we have in the marketplace, puts us into a spot where no pun intended, where we feel like we're, well positioned to challenge the decision that the SEC has made and take this to the courts to seek an approval.
So has anything transpired since that time we last spoke
that
has changed or enhanced your view?
Yeah. So look, before we had a filing, in front of the SEC, we were acting on our own merits and making sure that we were, really acting as the voice of our investor base. And, with all due respect to all the other filers, they're conceptual in nature in the sense that they don't actually have a product in the market. We have a product in the market that has, nearly 1 million investors. That product in the marketplace. So having a filing in front of the SEC put us in a position where it opened a comment period. That comment period resulted in, us activating our investors, and we had over 11,600 comment letters that came in, and well over 99.5% of those comment letters agreed with us. And this wasn't just, retail investors and institutional investors. They were also members of the market participants, trading firms, APs, trade associations, very large trade associations, and then also some really serious academics that were putting significant research behind, their support of this conversion. And, on top of all that, all the work that we have put in to become operationally ready, to ensure that upon an approval, that we would be actually ready to do this. And so that work is certainly not lost, because we certainly believe we're going to be, have a product in the marketplace, but we certainly couldn't be in a position where the SEC approved us and we weren't operationally ready to bring a product to market. Now, what does that operational readiness mean? There's internal components and external components. The internal component is obviously to ensure that we're positioned to be an ETF issuer. We're ready to do that. And the external components are, through service providers. So, our relationship with our custodian, with Coinbase, and our relationship with our administrator, with, Bank of New York, and ensuring that all those communication portals and procedural portals and processes have all been, aligned and executed properly. And then the second kind of external readiness is with market participants. And so that's, as I broadly like to categorize, the liquidity ecosystem, which is, the exchange, and that's NYSE ARCA, and then all the trading firms, market makers, and authorized participants, and ensuring that the secondary market trading would be efficient and the primary market trading would be efficient as well. Now, we're in a unique position that we have a product in market, and despite the fact that it's not trading on a national securities exchange like NYSE, it does ensure that there's liquidity in the secondary market, very significant average daily trading volume in excess of $100 million a day, and a number of market participants that are streaming quotes in and ensuring that they're providing liquidity to the marketplace and managing the risk appropriately. So we're in great shape. We have APs that have signed up. So there's been a ton that has transpired since we put the filing in, an activation of our clients, and then an operational readiness internally and externally that we feel really, really strongly about.
So Grayscale embarked on a very public campaign in a way, or at a scale perhaps, that a few previous applicants had, and received more than 11,000 letters submitted, mostly in support. I believe the number quoted was 99% in support of your application. Do you think this was given due consideration?
So on a statutory basis, when you have a 19B4 filing, the commission needs to pay attention to that public commentary. And certainly if you went through the 90 odd pages, you would see dozens of references to those letters that were received by the SEC. So, are those going to be things that trump any decision that the SEC is going to make? I think that would be foolish to suggest such. But they certainly have to pay attention to the to the comments that were made. And certainly in the case of some of the commenters, they're very well established in the marketplace, very well established within trade associations and within, really reputable academic institutions. And so, we believe that it certainly was paid attention to by the SEC.
Yeah, I mean, they're certainly doing the work. They're going through the letters, addressing the substantive arguments that have been made by all of the diversity of comment letters, as Dave pointed out, academics, market participants, institutional investors, retail investors, you name it. So they're doing the work and they're addressing them. And you can see that in the citations and all of the arguments and counter arguments that are laid out. But we're just at a point where, we disagree with the outcome. And so we're looking forward to further engaging on it.
So when we have a look at the news, almost on a weekly or monthly basis, there is a Bitcoin spot ETF being approved somewhere in the world, and you don't have to look too far. Just over the border to Canada, they've got 2 or 3 spot Bitcoin ETFs. Now, I look at that and I say, well, what kind of protection measures is the SEC looking for in reality, in practicality, when the rest of the world seems to be operating just fine?
Yeah, I mean, the U.S. financial markets didn't become what they are today without the very robust regulations and protections that we have. It's what gives investors confidence that they can invest in the U.S. markets and have all of those protections and surveillance and transparency that they've come to expect. But I do worry that by us taking this stance on spot Bitcoin ETFs, let alone other digital assets that other parts of the world already have these types of products for, that we are losing our competitiveness with other jurisdictions where the innovators and entrepreneurs and investors and market participants are clearly gravitating towards.
Yeah, I mean, I take that point on board, but these are not tin pot countries either. Canada's an established, well-regulated market. So is Australia, Switzerland, Germany. I think does France or Spain also have one, or perhaps they've got some in train. But these are also very well-developed economies, well-regulated financial markets, and in the case of Australia, they have very deep pension funds.
Right. Yeah. These are other marketplaces with robust securities laws, regulations. I think Canada is a really good example. One one nuance there is that in the Canadian securities laws, the burden of proof is actually switched. And so it's on the part of their regulator, the Ontario Securities Commission, which is their version of the SEC, to prove why the type of investment vehicle should not be approved. Whereas here, the burden of proof is on the issuer, in our case, Grayscale. But nonetheless, even regardless of that burden of proof, we feel that it has been well met, especially given the fact that we have futures-based Bitcoin ETFs under the same regulation, so the same standard as the Securities Act that a couple of these others futures-based Bitcoin ETFs have been approved under.
Yeah, and I would just layer in one more point there, and I'll preface by saying, unfortunately, we have like 2 minutes left, and Craig and I both have another commitment. You might imagine we're we're a little busy over here, but what I would say is that much of the world is really, in our conversation with other jurisdictions, other exchanges, and other domiciles, much of the world is actually looking to the U.S. regulatory framework to inform how they're going to approach this. And it's clear that the SEC is not going to be influenced by others and the decisions of other regimes, but it's also clear that others will be influenced by what the U.S. does. And so, we're cognizant of that, and I think we, take a lot of pride in the strength and the conviction that we have, the approach we have, how organized we've been, how clear and how methodical we've been, and certainly the transparency that we've brought to our investors and brought to the market. I think there's one thing that I would close in saying is that, people might see this as us being, at odds with the SEC. And that's certainly the case that, we have decided that we're going to, take this action. But we certainly have one very common interest at the core of both of our organizations, and that's investors. And, the SEC is governed by the premise to protect investors. And we certainly have governed every bit of our business by making sure we're delivering value to our investors and advocating for our investors. And so despite the fact that, we're taking this action in the courts, we certainly have a common interest of the investors.
Well, I appreciate you both coming on board. I don't want to hold you up any further. I'm sure your commitment's fully backed up for the rest of the day. Good luck on your challenge to the SEC. Dave, Craig, thank you for joining us. And Jennifer, I really appreciate you
Thank you for having
organizing
us.
this as well. Yeah, anytime.
Thank you so much.
Bye, everybody.
Thanks, guys. We still got the Bloomberg boys hanging around, and we'll just dive a little deeper into some of the issues that we've got. Eric and James, you're cool to stick around for a little while?
Yeah, I'm good.
Great. Look, one of the things. Sorry, go on.
I was going to say one thing that Craig and Dave both mentioned. Craig talked about the Ontario Securities Regulator, and it goes back to what I was saying. That the SEC basically needs to wants the issuers to prove a negative. They want them to prove that manipulation is not happening, whereas in other areas it's on the regulators to prove that manipulation is happening. So that's part of the that's basically what Craig was saying. Who the onus is on. The other part is that what Dave mentioned, this is a standardized process. This isn't like some out of left field process. This is the way that you challenge a decision from the SEC. So it's not like they're going like way off the reservation to do this. So I would just point that out as well.
So what is the process from here on in? I mean, we know that they're, I think it's a court in Washington, is it, that they're filing in? So what's the process? What happens from here?
Yeah, so this goes directly to the appeals court. So I'm talking now from we have a litigation analyst who I've been working with the last few days, and we wrote a couple notes. Thank God we got our note out before this decision came down, because there was contemplation of not putting the note out until today, which would have been a complete waste. But essentially, this goes directly to the appeals, which means that it basically sees the SEC's decision, for lack of a better term, is basically like a lower court decision. So it goes right to a higher level of the court. In this case, it's going to go to the DC Circuit. And what happens there is you get a 3-judge panel. So right now in the DC Circuit, there's 4 Republican judges and 6 Democratic judges. And I think one of those 6 is Ketanji Jackson, who was just promoted to the Supreme Court. So there's a decent chance that basically if they get 3 Republican judges or 2 Republican judges that are favorable towards Grayscale, they could end up winning initially. But then the SEC could ask for basically an appeal within the appeals court, where the entire DC Circuit, all 10 or 11 judges, would have to come back and rule, and then the SEC would win. And then we could get to a situation where it goes to the Supreme Court. The one thing I would say is we've seen a lot of Supreme Court decisions, a lot of court decisions that have become very conservative and not anti-regulator, but taking away some power from the regulators and their ability to go like further with what they're accepted and allowed to do. But in this case, this particular case is very much like very specific on the details. The SEC has been very, very particular in the words they use and how they are defining this. So, like I mentioned earlier, our litigation analyst says this is definitely Grayscale's definitely an underdog, but he says there's like, it gives, I don't know, 70% chance to the SEC. There is a chance that Grayscale could come out ahead in this. But again, it could be a long time. But he believes that if things are rushed, and obviously they have been, they filed the lawsuit as soon as they got the denial letter. It was only a couple hours after the denial letter came down that they issued a press statement that they were filing a lawsuit. So at the earliest, we could get a decision from this court sometime in the first quarter of 2023. And then again, there's some appeals process and different things that can happen after that. But the most likely timeline is closer to 12 months, maybe sometime in the second quarter of 2023. But that's basically my understanding of how things are going to potentially play out.
Is there any significance to them filing? Is it the DC circuit you called it? Is there any significance to that? Do you have a choice of where to file, or is it just goes in a particular area?
Yeah. So because this is the SEC, I believe that's where it automatically goes.
Oh, okay.
So that's basically what it comes down to.
And so one of the things that I don't get as someone who's not immersed in, the financial industry, ETFs, and all the legal frameworks of this is when the SEC specifically says that the Bitcoin ETF application failed to meet the consumer protection requirements. And I look at Bitcoin Trust with tens of billions of dollars of assets that's pretty much accessible to, anybody who wants to invest in it. So what is the difference between that and a Bitcoin spot ETF as the SEC views it?
Yeah, so that's kind of where our argument has been. So Eric can probably would agree. We've been saying this is already out there. If the SEC's goal is really to protect investors, they should be basically offering the best vehicle that they can. The problem is that the Grayscale, the way they launched this was fantastic for people back in 2015 who wanted access to Bitcoin in your IRA or traditional brokerage accounts. Right now, it's a lot easier to get access to Bitcoin or in those type of those basically on the traditional financial rails. So what you're saying is like, I agree with the argument. I actually agree almost 100% with everything that Grayscale is saying. But just because we agree with them, we also have to make sure that we're right. Eric and I, we have to, no matter what our personal opinions are, we have to kind of like call it as we see it. And the fact of the matter always is going to continue to come back to the SEC's arguments. Now, the other thing is the SEC is not a merit regulator. They're not supposed to make decisions about what can invest based on their view of that investment, which I personally believe there might have been some of that going on, but they never said it publicly. It was never said in the documents. They've always stated that they're not making a position on that, but they're using what they're allowed to kind of like enforce that, in my view. And again, Eric said it already earlier, and I'll just repeat it. Gensler wants to basically say that he tamed the Wild West of crypto, in our view. So he wants to be able to put on his resume that he was able to do that. This is a very good thing to like have to say that you've been able to done, and he's a politician first and foremost. So being able to do that is something that I believe him and the SEC are always going to be for.
So you just mentioned and alluded to his potential political aspirations. Is this something that he wants to delay until he moves on to something else, politically speaking, so that down the track his hands are clean?
Yeah, so I don't think part of it is I don't think he wants to anger the Elizabeth Warrens and people of the world who are anti-crypto, because those are the people that would ultimately help decide, like, dictate his political future. So that's the first part of the question.
James, let me jump in. I would also say that it's almost like there's not a ton of upside to approving it, and there is risk to approving it. I mean, even though we've seen that Bitcoin ETFs and the rest of the world do fine, and we know they'll do fine, I think he sees it as maybe an unnecessary risk, but one he's more willing to take if he could get regulation in the underlying market. And so I think it is as much a regulatory calculation as a political calculation. And it's the political calculation that is just the almost the most important variable, because it helps you understand the illogic of it all. So I think you have to factor that in.
Yeah, I mean, that's why I look at the whole landscape of Bitcoin and how to access Bitcoin, there's absolutely nothing stopping anybody in retail investing in Bitcoin directly. And so if consumer protections were the issue, surely they would be laying down exchange regulation as a matter of urgency, particularly over the last 18 months when we've seen interest just go through the roof. And yet they haven't done that. And so I sit here rather cynically and look at it from a political point of view and go, oh, this is just political maneuvering. It's either vested interests from traditional finance lobbying in this direction, or it's just the political machinations of managing the risk of such a decision and whether or not such a decision can be averted, delayed, put off until such time that it's a little bit more convenient. Now, I'm I guess I'm not as strong on the traditional finance lobbying as I am about the politics, because I can see traditional finance, Wall Street is just lining up. They're all getting ready. They're all getting into Bitcoin, and they can't wait to get their hands into the broader crypto market as well. But something I mentioned the other day, all of the top custody banks on Wall Street now have digital asset custody services. And that's being driven by largely Bitcoin and I guess to some extent Ethereum as well. And that's because their customers want it. Their institutional customers, high net worth customers, they all want that. So politics is the only thing that I can sort of land on and say, oh, that's what's happening. They don't want to take the risk. And so I don't think they ever wanted to approve a Bitcoin ETF. And I think perhaps they even were challenging Grayscale to take them down this legal route so that their hand is kind of forced. What do you say to that?
Yeah, so I would say something that I've written over the past few years, and Eric and I have both written. I think the SEC is missing the forest for the trees here. They're focusing on specific underlying details of the law to basically stop this from happening, rather than seeing that approval will be pretty much better for everyone involved. Anyone who wants to invest in Bitcoin will have better protections if they can have an ETF. Obviously, GBTC is an inefficient vehicle. Bitcoin futures ETFs, they are better than GBTC depending on how you want to use it, but there are issues with that when it comes to roll costs. So basically, they're holding the ETFs hostage to get regulation on the underlying spot market. This is what it comes back to. We've been saying this for a while. They are not going to approve an ETF until they get regulation in the underlying spot market. They want to be able to see what's going on. They want surveillance agreements. They want to be able to go in and look for manipulation if they suspect it's there. And that's what this is going to always come back to. I think even if you could get some people off the record to admit it, they'd agree that this would probably be better for the underlying markets, even approving this. As Dave Lavelle was saying just a little bit earlier, like a lot of different institutions and aspects of the markets come in and make things more efficient when you approve an ETF on a specific area. But that's not what this is about. It comes back to what we were saying, the political side of things, and it comes back to the fact that they want to be able to regulate and surveil the underlying spot markets of Bitcoin exchanges.
So on that point of unregulated exchanges, what would regulation look like in that? And particularly when it comes, I'm just getting a bit exasperated here, but when they talk about manipulation risks, are we all supposed to just pretend that GameStop didn't happen and lay bare exactly how the game is rigged? I mean, that was barely 2 years ago when we all saw how that game was rigged and how it played out, with insiders effectively just rorting the market, broader awareness of what how order flow is bought and basically corrupts the purity of the market. And yet there doesn't seem to be any kind of urgency or concern in that regard. And yet when it comes to Bitcoin, we're led to believe that suddenly it's the Wild West, and which it is, but it's no different really to regulated markets. Mostly the regulators don't do anything until there's a political urgency to do that. So
yeah.
Go on.
Sorry, I didn't mean to interrupt you, but I would
say
go ahead. There's a lot of wash trading and spoofing and a lot of other things that are happening on these Bitcoin exchanges, especially. I mean, I remember Bitwise did a fantastic, like extremely long PowerPoint presentation of the SEC a few years back, just showing how so many of these spot exchanges are just lying about their volume. It's all fake volume. There's a lot of details to prove how much of the volume in the spot markets are actually fake. So there are a lot of issues with the underlying spot market. I'm not going to act like I'm a Tether truther here, but there are issues with a lot of other areas. So the SEC did mention Tether 7 or 8 times, I think, in this denial, which is the first time they've mentioned it more than once. Typically, it's just like a footnote that they mention it. So there's a lot of areas where they are concerned. Obviously, the GME thing is they did have a Senate hearing on it. But the thing is, if they needed to, if the SEC wanted to, and they can go in and they have surveillance. They can go and look at the exchanges and see exactly what happened to look if somebody was manipulating the markets or whatnot. In those instances. Now, I'm not going to get into the details of, we don't need to go down a rabbit hole of that GME situation or the other meme stocks, but that's what it comes back to, is the fact that there's so much wild west things happening in the Bitcoin and crypto markets, which again, like I said, I completely agree with everything that Grayscale has said. I don't side with the SEC here, but just more pointing out what they're seeing and why they're making the arguments they have, even if I disagree with them from a higher level.
So if we have a look at, if we take the point about unregulated exchanges and all sorts of behavior on that, and, just the broad brush strokes about what the regulation framework would look like, are they essentially saying that, sure, traditional financial markets, there's a whole lot going on there, but at least it's a little bit more refined than what's happening in the Bitcoin markets? Is that what they're effectively saying? Because we know that there's all sorts of manipulation in all markets, right? We know that it's an open secret.
Yeah, so I mean, it comes back to the fact that if they need to, they can go in and look at what happened in those exchanges in the traditional financial markets, and they can't do that right now in Bitcoin.
Can't they compel exchanges to share that information if it's asked for?
So I'm not going to pretend to be a legal or regulation specialist, but essentially, if you register as an exchange, there are a lot of different things you have to do. You have to share trade data. There's a lot more information that you have to maintain. Potentially, some of these exchanges might not be attaining to that level. I don't know if that's necessarily true, but there's a lot of compliance things you have to come to do to be what is known as an exchange or an ATS, or what's called an alternative trading system, and you register with the SEC. So there's a lot of data and information that the SEC will require access to, which in the case of the exchanges right now, I don't think they have to. They would have to, I don't know, I really don't know the answer, but I would imagine they'd have to file a lawsuit or something along those lines to get access to that data. Whereas if these exchanges were under the regulatory framework with the CFTC or the SEC, they could just go and get it, and then those exchanges would have to provide that information.
Okay, let's all. It's all very frustrating, and so now you're saying that it could be, a 12-month process at the soonest. In between that time, that we've got midterms. Do you think that will change the calculations?
It's possible. I mean, there's a few things I'm watching, right? One, so like I mentioned, this could be finished before this lawsuit is done. There's the Gillibrand and Loomis bill that's in Congress right now, so we could see congressional action in this space that would basically answer some of these questions, maybe force some of these things under the CFTC. It looks like there's also voluntary situations where, like, the FTX right now is trying to basically do things where they're changing different structures and the way that the spot markets would work under the new settlement structure for the futures market on FTX would basically make their spot Bitcoin markets CFTC regulated. So, and I saw Gensler not too long ago in an interview say that he's talking with exchanges about coming in line with the SEC regulation. So there's voluntary aspects of it. The other side of it is, if these things get called securities, like if there's a bunch of crypto tokens, which I think most people on here would agree that a lot of these crypto tokens are securities under regulations. Not all of them. Bitcoin obviously isn't. Gensler even says Bitcoin is a commodity. But if some of these tokens that are trading on these exchanges do become classified as securities, then these exchanges would have to register with the SEC as, like I mentioned, what's known as an ATS or an exchange. So that automatically solves the problem of a regulated market. And so there's all these different avenues that essentially could end up satisfying the SEC's requirements to launch a spot Bitcoin ETF, potentially before we even get an answer from the courts.
Excellent. So I just want to give the audience a heads up. If they want to ask a question, go ahead and request now while we continue having our chat. Now, there seems to be a bit of a conflict between the CFTC and SEC, or maybe not conflict, but an overlap. And no one really knows who should be doing what. But I get the feeling that there is a weak consensus starting to emerge. How do you see that playing out? And do you think there's any possibility of an agreement coming out? Because I know some time ago the White House effectively had enough and just laid down the law for them to get into line, and we saw, Janet Yellen singing a different tune and whatnot. So I'm just wondering, do you think that's going to be sorted out first before any Bitcoin ETF is approved?
What exactly is going to be sorted
So
out?
CFTC and SEC, there's a lot of confusion about who should be regulating what parts of crypto, whether they regulate, for example, exchanges, Bitcoin, other crypto, whether the CFTC takes on Bitcoin and perhaps Ethereum as that's also been muted as a commodity, and everything else falls under the remit of the SEC. But if either of Bitcoin and Ethereum are wrapped up in products that are deemed securities, like a Bitcoin ETF, then that would obviously fall under the SEC's remit. That's how I'm starting to see it, just based on conversations and comments that are emerging in the media.
Yeah, I mean, so no matter what happens, the SEC and CFTC are going to have to work together on this. They'll put on a happy face and say that they're working very closely together and doing things very efficiently. If you talk to anyone who's worked at those agencies, they don't. It's often that they don't work very closely together. But that's basically what's going to happen. I mean, there's plenty of futures-based ETFs, which obviously the futures market reports to the CFTC. The ETFs are part of the SEC's regulation. There's commodities ETFs that, again, go to the CFTC and report also to the SEC. So there are plenty of areas where they do work hand in hand. Now, if you go back to the stuff you were talking about with Biden's crypto order, basically telling everyone to get in line, that all just goes back to the more stuff I was talking about. There's basically a movement within the government to kind of get everything settled and figure things out. It's the government. It's bureaucratic. It's going to take a long time, or potentially a long time, for this to get done. So my very, very strong opinion is this is a matter of when, not if. So that's just what it comes back to. It's a matter of timing when this thing actually becomes an ETF.
Excellent. Okay, we might take our first question. Unmute your mic and we are ready for you. Go ahead.
Can you hear me?
Yeah, we can hear you.
So I have a question for the ETF people from Bloomberg. Say in the worst case scenario, which I'm assuming a lot of you people think is the default, that Grayscale is forced to dissolve their trust. How would that process work? Would they have to pay the redemptions in USD? Would they have to sell their BTC into USD? If there's this thing that I read about where they would have to apply for some sort of like redemption exemption. I'm not sure how that would work. When they dissolved their XRP trust, they didn't pay back Ripple, they paid back like USD. So I'm just wondering how that would work.
Yeah, so it would definitely be paid back in USD. So you'd basically get, theoretically, you get a dollar amount of whatever the NAV is worth if they dissolve the trust. I think we're a long way away from that happening. You were talking about the redemption program. They cannot operate a redemption program because they're traded on basically the OTC market. So they would violate Reg M if they did that. So that's my understanding. I'm not a lawyer.
There's an exemption.
I won't pretend to be.
Sorry, yeah.
Yeah.
I was like
so ETFs have an exemption to basically operate this what the creation redemption process. So theoretically, in an ETF, you can create or destroy supply to meet demand, and what that does is the price is always going to be in line with the NAV. With GBTC, the supply is fixed. So as demand increases or demand falls, the price is going to go with demand because supply doesn't change. So that's the issue with the current structure. But those ETFs have a special exemption from all these rules that allows them to operate a creation program and a redemption program at the same time. What I believe Grayscale could do is they could do things like lower their fee, which would obviously help some people. I'm pretty sure they can do tender offerings, would basically buy shares back. So there are things they can do that they haven't done yet. I guess they're probably just right now focusing on the lawsuit, and after that, they'll probably have to analyze other ways to handle this. But yeah, the one big thing, if they had to dissolve the trust, would be the fact that they own so much Bitcoin, and they would have to basically sell the Bitcoin on the open market, which should not be a good situation for anyone who holds Bitcoin.
But also, if they have to make everybody whole at NAV, that's going to cost them so much money.
Yeah, they would sell the
No?
Bitcoin, and then they would have to sell the Bitcoin and give them back at NAV, essentially. So they'd have to liquidate the whole portfolio, which is what would be bad for Bitcoin.
Right.
What would necessitate the dissolution of the trust?
I'm not even sure. I think it would have to be like a shareholder vote, essentially, to basically vote to dissolute the fund. But I mean, maybe that'll happen. I think first we need to see what happens with this lawsuit over the next year or so. I mean, if we're talking about this in a year or two from now, that might be something that's more realistic. I don't really see that happen. That wouldn't be beneficial for anyone. Not Grayscale, not GBTC holders, not anyone, in my view.
Now, someone mentioned on the timeline that I noticed that you replied to, this 2% fee for Grayscale. Do you think that's becoming a little bit controversial given that the trust is closed at the moment?
I mean, that's one thing I have been critical of in my writings. It is a very high fee, but I mean, back in 2015, that wasn't a high fee. That was pretty standard. I mean, there's a lot of ETNs in Europe. The first ETNs in Europe were over 2%. So it's just something they haven't changed. So personally, I think like one thing they could do to appease their upset holder base, I guess, is possibly lower that fee, because 2% really does add up as you compound over years. But yeah, I mean, that's not something I can control. That's a better question for Grayscale representatives to answer.
Yeah, fair enough. Hey, we've got Hi. Are you there? Hi. Take your mute off, and we are ready for you.
I am. Thanks for having me up. Just one quick question. I know you guys mentioned the SEC trying to go after, I guess, tokens or coins that they think are securities and whatnot. To your guys' best knowledge, besides BTC, have they come out with the list or any other tokens they're looking into that they're deeming as not securities? Or is it just kind of going one by one as they see things pop up, or as people report coins as being scams, they're going to go after everybody one by one?
Yeah, so they are they just beefed up the crypto litigation side of things. So they're basically people looking after people doing fraud and manipulation in the Bitcoin markets. So they're adding people to do that. The other side of this is, honestly, the only other one I've seen Gensler talk. This is before he was I've seen videos of him talking before he was the chairman, and he said that he believes that Ethereum was initially a security, but he doesn't believe it qualifies as a security right now. That's the only other one I've heard anyone really talk about. Other than that, they're leaving everything on the table. They aren't going to say things aren't a security if they don't have to, because they'd rather keep that in their back pocket if they can. But the other aspect, you come to Ripple. Ripple's been in this litigation for how many years about whether it's a security or not. So it's not quite as simple as just naming them securities. The thing with the exchange side of things is if they start calling all of these things securities, then these exchanges, like, it gets difficult for them. Do they want to fight the fact that they're not securities, they are securities, or is it easier and cheaper for them to just come in under the SEC purview and register as an exchange or an ATS? And I know for a fact, like, some of these exchanges have like subsidiaries that are already registered as ATSs and exchanges in the event of something like that happening. So there's a lot of if, ands, or buts, but really it comes down to, I think it's going to have to be congressional action that deems what these things are. Because if you have a lawsuit like situation like we have with Ripple going on for every single security or every single token that I view as fitting a security, I don't know, that's not going to solve anything, honestly.
And that could conceivably happen, especially if they all see that the SEC does not have the resources to handle every single one of these. Because a lot of these sort of token organizations or whatever they are, they do have quite a lot of money to be able to engage in that kind of legal action. And if they suddenly see that those actions are piling up on the SEC, they might as well just all join in the fun and just file for the sake of it. That probably won't ever see a courtroom, but at least it puts pressure on the SEC to act in one way or the other. So that could be a little bit of fun. Sorry. Luis, you got a question? Luis, if you don't have a question, I think we have just about hit the 1 hour mark. So I want to take this opportunity to thank Eric and James from Bloomberg for joining us once again. I really do appreciate it. Very informative and insightful. Thanks for sharing your expertise with us, guys.
Thank you.
Thanks for having us.
And thank you to everybody who's tuned in. Appreciate it. And until next time, see you then.